My people, yesterday I did a video and I think most people didn't get the message that I was trying to pass. So yes, the video that I did yesterday, I was trying to say that I was trying to discourage people from trading with the small accounts. What normally happens, most people normally deposit something like $2 or $5. Then you go to try trade something like over and under. You try to trade something like under 9. Some others go to trade even under 8, over 1, over 0, over 2, and even probably even something like under 7. The moment you go to trade over and under with small accounts, the returns are actually very little. That means you'll have actually to take so many trades for you to be able to earn some good money. And most of these small accounts, you normally suffer from what you call over trading, because the moment you deposit something like $5 and you try to precisely trade and make something like even like $2 or $3 or even another extra $5, you'll still not get satisfied. So most people, they normally, you'll deposit $5 and you want to flip it to something like $20, and you are trading over and under where the returns are actually very little, and your stake is something like 0.35. It will actually take you very long. It is possible you might get a good market where you'll manage to go through and be able to flip an account from $5 to $20. But out of all the people, out of 100%, all those people who normally do that, the number of people who normally go through are like, let's say like 5%. Most of the guys, actually their accounts don't go through. They'll just grow their account in the process. So the problem with small accounts is that you'll suffer from a problem of that is over trading. But if you have an account of $5, then you just you can go and still trade and make something like $1 or $2 and leave. The problem is risk management, and that is the trading discipline. Because if you are trading something like under 9 or even over 1 or over 2, I mean over 0, or even under, let's say, under 9 and under 8, it will actually take you so long to actually move that account from $5 to something like $15. You'll actually have to take so many trades when you are trading even and odd. That is over and under. But if you have a good strategy that is actually working on something like matches, small account work best. Because if you deposit something like $10, you stick like $5 on matches, that means you'll be winning $40. The moment that trade goes through, you win something like $40. For the matches, you can work with small accounts. That's very much okay. Don't have any problem with that. What I do, I discourage people to go and trade something like differs, or you go trade something like over and under, unless you are trading something like let's say like over 4, or even under over 4, or something like under 5, or even like such risky market, the market that have more risk, or something like even rise and fall. But you find most people like actually most traders, like 60% of traders normally trade over and under because it is the least risky market. Now you find like most people are actually trading over and even over and under, then you just go and trade over and under, but your account size is too small. It's too small. You have just deposited something like $10 and you want to make like something like $20. It is possible, but you really have to struggle, and also the risk of blowing up that account is actually very easy. Actually, on the comment section yesterday, I saw many people saying like they deposit $10 and they will trade it to something like $17. Then by the time they are approaching almost 20, everything is completely gone. Yeah, that's what normally happen. Actually, even DERIV, something else that you need to know is that DERIV is actually an intelligent system. It's an AI. So they are actually observing what you are doing. The system is studying what they are doing, and they will come up with a way of countering you. So they know the system has some kind of psychology that they know the moment you deposit $10, you aim for something like another extra $10. You want to flip your account, so they'll just wait for you to trade up to something like 18. Then they will manipulate your trades and your account is gone. So risk management is a very important. Also, don't bring greed on DERIV. I also saw a guy saying that he traded an account from $8 to around almost close to 4,000. That is in the comment section. It is possible. It is very much possible, but the risk is actually very high. If you go try and do that, you might be, if you don't have some good skills, also even you might have some good skill and it still doesn't work out. I can also trade with a small account and still be able to make money, but I really don't do that because the risk is a bit high. Yeah, most people want to trade over and under, and the account is too small. If you want to trade this kind of market with those small accounts, just go and learn on how to trade something like rise and fall. Just go and try something like even and odd, or something like matches, something that you'll be winning something almost equivalent to your stake. The moment you have like $5 and you stake something like $3, then you go to rise and fall and trade manually. You press just go analyze the market, just go analyze the market, draw the, just go and look for the reversal points. You have just go and draw resistance and support. You'll be able to get the reverse point and praise your trades. The moment you deposit, you stake something like, or even you can even if you are good in analysis for the rise and fall, you can decide even to go for full margin. You can just take $5 and trade for something like place a duration of something like 30 seconds, that is something like 30 minutes or even 15 minutes, depending on how you analyze the market. Then by the time that time is ending, your account, you'll have actually be able to flip your account. That is in manual trading for rise and fall. Actually myself, when I'm trading rise and fall, I normally trade manually. I don't use a robot. When you are trading manually, it's more safe and it's easier to do it. The robot will actually blow up your account very easy, unless you have a good working strategy on rise and fall to use it with the robot. But myself, I prefer to go with the manual trading. That one I'm very much accurate. I can rarely lose a trade on rise and fall. So that's what I normally do. But trading with a small account, guys actually misunderstood me. Actually on my comment section, I have so many guys calling me names, but I really don't mind. As long as myself, I'm okay, I'm trading, I'm making money, I don't care what you say. I was just trying to help the few people. Don't deposit your money. Don't deposit $5 and go and think that you can be able to make much. That is on DERIV. You'll actually be manipulated. So another secret in trading, take the least time. I also did another video yesterday telling people to, the moment you go to trading, just take a few trades and leave the market. This idea of trading the whole day, you get in the market in the morning, you trade the whole day until evening. You'll actually trade for some time, but by the time it's getting to the evening, you'll have DERIV will actually manipulate your trades, that you lose all your profits, and if you are not careful, even your capital will be gone, and that is how you find most people actually quitting trading. So have a trading discipline, have some good capital, have also good trading psychology. Okay, there's a guy I saw saying that the demo is so much different from a real account. I don't agree with that. Either you are trading on demo or you are trading on real. The only difference between the two is the psychology. But in terms of market, everything is okay. It's all the same. When you are trading on a real account, there is some kind of fear, because you are dealing with the real money. The DERIV actually gives you a demo so that you can actually learn from your mistake without having to risk your capital. So you can actually learn the demo. If you blow up the demo, you can reset and still continue practicing on how to trade. So you can actually learn your mistake, make errors on the demo, and be able to correct yourself without having to risk your money. So take time on the demo. Don't rush into trading. Some guys, you just go on Telegram, get a robot, try to run it on the demo. You take 5 trades and you see they are successful. Then you jump into a real account and start trading and expect the same thing to happen. The moment you go on a real account, things actually get different. Why? Because of the psychology. Like you might be good on the demo, you might be shining on the demo, but once you go on a real account, everything turns upside down. You know why? Because when you go on a real account, you have fear, because you have really invested your real money. So what normally happen when you're on real account, you have analyzed the market, you want to trade now, and you have already identified the market. Now you want to place your stake. The moment you go to place your stake, now you start, and the moment you want to run your robot, you start asking yourself, what if I lose? So you are still taking time. Hiyo market hapo haijapigiliwa musumari ati ikugoje, haijapigiliwa musumari ndio ikugoje isipite hapo. So the market is still moving. That's why these are volatilities. The market is volatile. So by the time una decide ku run the bot, market ilicha change, inaingia kama imekupiga. Ukiamua ni kuingia kwa trading, woga asha mbali, ingia tu kibazuka tu. Just go and trade. Ikipotea ni sawa, you run from your mistake, but woga tuashe. Let's meet in the next video. Goodbye.